Want to be sure you're getting the most out of your retirement for all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now here's Jim with this week's Dollars and Cents tip.
Earlier this spring, our Tennessee legislature passed laws repealing the Tennessee gift tax and the Tennessee inheritance tax. And on May the 21st, just a little over a week and a half ago, Governor Haslam signed those bills into law. What it does is it immediately repeals the gift tax in Tennessee, retroactive to January the 1st of this year. So if you make a gift, you don't have to pay a Tennessee gift tax. And we will be phasing out the Tennessee inheritance tax. In 2012, there is still an inheritance tax on anything over $1 million. In 2013, that goes to $1.25 million. In 2014, it goes to $2 million. In 2015, it goes to $5 million. And then beginning in 2016, the Tennessee inheritance tax completely disappears. That is something that even one short year ago, I think, anytime the repeal of the Tennessee inheritance tax has come up, it's really not even really been seriously discussed. But the current Congress, along with Governor Haslam, was able to get that done. Couple things to note on that. Remember, there is a federal tax, so don't get caught up in thinking, okay, there's no gift tax now, I can give unlimited amounts of money. That is true in Tennessee in terms of Tennessee tax, but you still do have the federal tax. So if you, number one, on gifts, you're still limited to a $13,000 gift per person. A married couple can give $26,000 per person away. So if you had two kids, you could give away $52,000 if you're married. You can give more than that and not pay a tax, but you do have to file a federal gift tax return. So, for example, if you wanted to give one person, if you're married and you wanted to give one person $126,000, $26,000 is tax-free. The additional $100,000 you don't have to pay the tax on, but you do have to file a gift tax return and claim that $100,000 towards your eventual estate tax exemption when you die. So you do have to file a gift tax return. There also is still a federal estate tax. It's on anything over $5.12 million this year. The big issue is if Congress does not change anything, it goes back to $1 million January the 1st of 2013, and the tax would then be 55% of anything over the $1 million. It's a significant issue. It is one most people expect to be addressed and solved, but it's kind of like anything else with our tax code. Everybody can say they agree on making changes, but unless they agree on what the change looks like, no change can be implemented. And that's the problem, is both sides of the aisle coming together and agreeing on what that change will look like. So my best advice to you on federal estate tax planning is I would probably say a little bit of a wait and see approach. But I definitely would get with your your estate planning attorney. And get with your team of professionals. At Brogan Financial, for example, we work with a team with several attorneys, several CPAs we work with. I'd get with your professional team to determine, okay, how do I need to react from this? Should we take a wait and see, or are there things that we can do right now today to take advantage of the law if it does indeed changes on January the 1st? So, just be aware of the repeal of the Tennessee taxes, but be careful you don't forget about that federal estate tax and watch it closely.
And that's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.